First things first, let's talk about some new rules that are going into place that is driving a lot of fear behind the crypto space, especially with the large mining farms in general. And while this might not impact you directly initially, you need to take into account that this doesn't, this flows down. They always start with the larger amounts and they go down and they tick down, and now, we're at the point of needing to report a $600 transactions on PayPal, and it just gets ridiculous and cumbersome and frankly just, anti-American in my humble opinion, but I'd like to hear your thoughts and opinions on it as well. Let's go ahead and hop into it though. This is reported by Ars Technica. Crypto IRS reporting crypto payments above $10,000 would be reported to IRS under Treasury plan. Fear of crypto being used for tax evasion drives Biden's admin's reporting plan. Now, tax evasion, of course, is going to be one of the big targets that they place on this movement to regulate cryptocurrency further and further and try to really smash that into the ground. It really, in my opinion, it hurts innovation the more stringent you get on these types of policies. And I think in general ends up hurting, new entrepreneurs, etc. And it forces people out of the business that, may have good ideas. That being said, of course, let's continue to read on because, we've been seeing this for a while. So I'm not going to harp on it too much. We've talked about it a ton as far as what the attack vectors will be, including, tax evasion, criminal use, etc. Completely avoiding, of course, once they get rid of Bitcoin, if they can, they would then, of course, attack cash. I think cash will be attacked pretty soon as well. Talked about that with Daniel Keller on the last podcast with him. That was a great one if you guys want to get into all of those types of conversations. The Biden administration wants businesses to report cryptocurrency transactions with values of at least $10,000 to the International Revenue Service. Cryptocurrency already possesses a significant detection problem by facilitating illegal activity. Of course, I told you guys that was going to get brought up, broadly including tax evasion, end quote, the U.S. Treasury Department said in its proposal for implementing the tax compliance initiatives in President Biden's American Families Plan. The larger Biden plan still needs approval from Congress. The Treasury document said that the crypto reporting is one part of the quote, the president's tax compliance initiatives that seek to close the tax gap, the difference between taxes owed to the government and actually paid. The proposal calls for a $4.5 billion investment in IT to implement a new information reporting regime that would help close that gap, which was nearly $600 billion in 2019. Of course, the important part here, I think, to really kind of push into place is the tracking, because what this is basically proposing an invasion of privacy, in my humble opinion. This is going to be a new program that is going to utilize information technology to track and report better so that they can keep track of everybody. And once that gets applied there, that gets applied out much broader than just, cryptocurrency or just PayPal or whatever it may be. U.S. law already requires that trades and businesses report cash payments of more than $10,000 to the federal government, the IRS website notes. And this information assists law enforcement in its anti-money laundering efforts and provides authorities with an audit trail to investigate possible tax evasion, drug dealing, terrorist financing, and other criminal activities, the IRS says. These are the tropes, right? Every single time we hear about cryptocurrency, it's bad because of blah, 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 and you just get a bunch of word vomit. The Treasury Department said it would apply the same threshold to crypto transactions under the proposed new reporting system, which is clear. Like I said, this isn't just cryptocurrency that this necessarily applies to. This is just included in it. Within the context of the new financial account reporting regime, cryptocurrencies and crypto asset exchange accounts and payment service accounts that accept cryptocurrencies could be covered or would be covered. Further, as with cash transactions, businesses that receive crypto assets with a fair market value of more than $10,000 US would also be reported on. Although cryptocurrency is a small share of current business transactions, such comprehensive reporting is necessary to minimize the incentives and opportunity to shift income out of the new information reporting regime. Virtual currencies have grown to $2 trillion in market capitalization, and the threat of illegal activity, including tax evasion, is why the president's proposal includes additional resources for the IRS to address the growth of crypto assets, the Treasury Department said. In a footnote, the Treasury Department cited a 2013 Michigan Law Review report that said, quote, to the extent that cryptocurrencies continue to gain momentum, we could reasonably expect tax evaders who traditionally execute their tax evasion techniques through the use of offshore bank accounts in tax haven jurisdictions to opt out of traditional tax havens in favor of cryptocurrencies, end quote. The Treasury Department said its tax enforcement plan would more than double the IRS workforce over a decade. And of course, we're talking about hiring even more IRS operatives, which will then increase the amount of money that they need to have, which will increase the money printing that we do, which will then devalue the dollar and increase the value of your cryptocurrency that they will then try to tax again, putting more liquidity into the US dollar market, and then of course driving the price of the US dollar or the value of the US dollar even further down. That's my opinion. I'd like to hear your thoughts on it as far as that's concerned. The IRS investment plan would also replace the Treasury's 1960s era computer architecture with new machine learning capable systems that will be better able to detect suspect tax returns, end quote. Reuters wrote, adding that according to the Treasury, the IRS is the only federal agency with computers that run on antiquated common business oriented language system, or COBOL. Now, this is something that's getting implemented across the board in lots of different areas. In fact, I saw World Economic Forum releasing one that is going to utilize machine learning to read brain waves and determine if you should take a brain break from work and when you should work and when you shouldn't work and how much you should work and what your productivity should be. And it will report that to your employer. It's getting simply ridiculous at this point, but also this is going to be the new world we are going to live in. And it's just coming very, 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 very fast. And there is the fact that cryptocurrency does make, by and large, a lot of this tracking to be a lot easier for governments in the end. And that is something to take into account when we're discussing different projects and their viability and how well they basically adhere to the principles of cryptocurrency and the fundamentals. The benefit at the end of the day is, even though it will be, in my humble opinion, easier to track cryptocurrency than cash, you will have that visibility on it from the regular man's citizen's perspective, which can put a little bit more power into the hands of the public, which I think is going to be a net positive at the end of the day, because then you can see what the government's doing with it as well as like any of your peers. The fear, of course, is that turns into more and more invasion of privacy and you get some weird dystopian future. And I think a lot of that will lean towards, once again, central bank digital currencies, and that will be the push that we begin to see as time goes on. A complete removal of the cash system, a push off of cryptocurrencies that are decentralized and not controlled by centralized entities, and into something that is controlled by governments. It is also getting a little ridiculous to the point to where, as the world gets more and more connected, it seems like we need less and less government, more local government, less federal government, at least in my humble opinion. And this kind of thing is just pushing in the opposite direction of where I think advancements should go and should be pushed towards, right? Let's move on, though. We'll go into SEC Chair wants crypto exchange regulation. There are also calls for new regulations on cryptocurrency exchanges to prevent investors from getting ripped off. Of course, this is the fear play that gets played across the board. Every single time we start talking about regulation within cryptocurrency exchanges, we begin to talk about getting ripped off or getting scammed, and this is going to be protection for you. Once again, take personal responsibility. With great power comes great responsibility. Cryptocurrency is a great financial power in the hands of somebody that is willing to take on that responsibility. And don't give that responsibility over to someone just willy-nilly, because you aren't eliminating any problems. All you're doing is moving the problem off to somebody else. And that actually can put you in a more compromised position. It's like investing in your retirement over and over and over again in Social Security, right? And then you get to the age to where it's your time to finally cash out your Social Security, and they're like, yeah, you're going to get, you know, not even enough for rent now at this point. So, you know, if we look at the past and we pay attention to how they manage those things, how do you think it'll be managed when it moves forward? Take that responsibility. That's what I really advocate here for. And cryptocurrency is a way that you can take responsibility for that, at least in my humble opinion. They are going to, you know, obviously use this over and over again. Nothing's really changed. It is going to be this FOMO. Or not FOMO, excuse me, this fear, right? FUD, I guess, if we want to use that term. But putting that fear into people of, well, yeah, of course I need regulation, because if I buy some Bitcoin and something happens to it, I want to be able to get it back. But if you were, you know, taking responsibility for holding your own cryptocurrency, holding your own Bitcoin, holding your own keys and keeping that, then in that case, you wouldn't be so, you know, you wouldn't have this problem. And once again, this is just going to be a way for people to invade your privacy, see what you're purchasing, do all that sort of stuff, along the lines of, like, you know, the way the current debit and credit card systems work. Anyways, Securities and Exchange Commission Chairman Gary Gensler said yesterday that he quote, he would like to see more regulation around cryptocurrency exchanges, including those that solely trade Bitcoin and do not currently have to register with his agencies, Reuters reported. Now, this is a little comical because we had meetings between Sam Bankman-Fried and Gary Gensler and FTX and discussing regulation and so on. And so if you expect Gary Gensler to actually have any sort of positive insight on or accurate insight on this, he got fooled by one of the greatest crypto scammers of all time. And so why would you want to trust him with regulating the rest of the exchanges, right? I mean, I don't know why you would. It seems a little ridiculous to me. Why don't we pick somebody that would actually know what they're doing in this space? Quote, this is quite volatile, quite volatile, one might say, highly volatile asset class, and the investing public would benefit from more investor protection on the crypto exchanges, Gensler said at the Financial Industry Regulatory Authority's annual conference. Earlier this month, Gensler told a House committee that right now these exchanges do not have a regulatory framework at the SEC or at our sister agency, the Commodity Futures Trading Commission. Right now, there's not a market regulator around these crypto exchanges, and thus there's really no protection around fraud or manipulation. There is a point from the perspective of manipulation, obviously with Trade Ogre recently. We saw this with kaspa. And once again, though, that problem with kaspa would have been resolved if you had your own wallet and you held your own keys and immediately exported that kaspa and ensured that there was a withdrawal system of that kaspa before purchasing it on that platform. And so I don't have a lot of sympathy for people that are going on, not making sure that there's a withdrawal option, not going through testing procedures to make sure that they can actually withdraw their cryptocurrency from an exchange, and not putting good practices into their investments. It seems a little ridiculous to me that you would put so much money into an investment and not even test the fucking platform beforehand. So if we kind of get into this, it's like, I'm like, okay, well, obviously there is this problem here, but there is already a solution to it, which is don't be a dumbass. So I don't know. I don't know. What do you think? I get a little frustrated with this every single time, but it is what it is. I had no kaspa on Trade Ogre. I sold kaspa on Trade Ogre. I withdrew in the early days, withdrew kaspa, and I would always go through the process of sending a little kaspa, making sure I could withdraw, making sure I knew what the withdrawal limits were, making sure I understood what the fees were going to be, and then go through that process, and then you're good. You're in, you're out, you're great. Just move it into a wallet that you control, and you're golden. It's not rocket science, really, at the end of the day, to not be an idiot. That's really what it is. A CNBC article yesterday said that increased regulation will likely upset some cryptocurrency investors who have seen the value of Bitcoin slide about 25% over the past month, and talk of capitulation creep into online forums. However, CNBC quoted policy analyst Ed Mills as saying that regulation would add further legitimacy to the asset class and could provide a regulatory moat around existing cryptocurrency exchanges. I like that terminology because if you guys remember, there is the kind of Trojan horse analogy for Bitcoin and traditional financial institutions where they really want to invest into it so that they can basically, you know, control it. But at the end of the day, what ends up happening is it turns into a Trojan horse. It drives up the price for the regular people. It adds transparency to what their investments are. And in the end, still ends up being a net positive without them really knowing, right? And that is kind of the big hope, I guess, surrounding institutional participation within cryptocurrency in general. Now, this was written, you know, a little bit further back, I think, because I think this was written back on May of 21, but this has actually, this $10,000 treasury plan is going into effect. So there is a lot of Bitcoin miners that are going to be dealing with, you know, basically a reporting problem, because if you're a large farmer and you are, you know, getting you know, $10,000 worth of mining revenue in a day, and then you have to report that every single day, it's going to become, you know, quite cumbersome to these individuals. This might be better for decentralization, though, at the end of the day, because it would discourage it, but you just move to different countries, and that is really what ends up happening. There's always ways around this, and the problem is that I think what you end up doing is you end up forcing Bitcoin miners offshore. And the problem I see with that is that I think the cryptocurrency will be a huge indicator into a country's economic wealth later on down the line. And if you have large cryptocurrency miners and you control those, right, all within your national borders, I think that nation in general is going to be an advantage. And I think that we've already seen, you know, Russia really building up on that. And you end up in this weird kind of Cold War with cryptocurrency and hash power between nations. And I think we're seeing that kind of come into fruition. We're seeing leniency get pushed back, you know, in China as far as Bitcoin mining is concerned. And we're seeing, you know, other competitors, like I said, in Russia really ramping up their Bitcoin mining as well, even to the point to where they are kind of inadvertently investing in miners in other areas like Kazakhstan and so on. So I think to discourage it in a capitalist, you know, society or an environment, right, where basically you're kind of you're leaning on private entities to bolster the economic value of the country, you need to be able to allow these people to move and function within those spaces, especially as it pertains to new technology. And I think that it will just basically push large mining firms to move into other more cryptocurrency friendly areas and regions. And then I think at the end of the day, the US loses out on not only the capital, the new capital from these companies, but they lose out on obviously the tax revenue from Bitcoin miners as well, which at the end of the day is what they're trying to get in the first place. So if you get too stringent, you end up having the opposite effect of what your intention is, which is including your tax, or increasing your tax revenue, and you end up decreasing it because you force everybody out with high regulations and cumbersome reporting plans. So I don't know. It seems a little ridiculous. Let me know what you guys think at the end of the day. I think right now you do have a lot of large mining firms that will have to report daily in this particular case. So now, you guys mined during the bear market. You made it through. Well, at least maybe a half of you. I know a lot of you motherfuckers over here didn't actually do it, but the ones that did, I have a new shirt for you guys. And it says, I mined with the bears for the bear market, okay? So if you mined with the bears and you want to rep that you did mine during the bear market, go ahead and head on over to shop.sonofatech.com and the listing will be down below. I'll put it in live chat right now. I have a sweatshirt. There's a sticker if you'd rather have a sticker, t-shirt, premium shirt, all that cool stuff. Really like the new shirt. I ordered a few for myself, and I just had that design finished this week. Eventually it'll be on the YouTube channel, but that takes a little bit of time, so just give it some time. Proceeds, of course, go to supporting me in the channel, so there you go. And I thought we put some work into it, and I thought you guys might enjoy it. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.